You want to invest in real estate, but you don't have the money to buy a property yourself? That's alright. Instead of taking tens of thousands of euros to buy a real property on your own, you can buy a real estate ETF, an open or closed real estate fund, or a real estate investment trust, more commonly known as REIT. As REITs seem to interest you guys the most, let's see what a REIT is in this GermanReal.Estate FAQ. On the most fundamental level, REITs are real estate companies that pool money from many investors, small and large, in order to buy properties with it. So if you don't have the money to buy your own shopping mall yet, REITs can be a great alternative to invest in properties you otherwise wouldn't have the money for. REITs are a lot more common in the US than here in Europe or in Germany, but they do exist. Not that many because they are regulated to the absolute maximum, which is also why I feel that our real estate security tokens are a better product than REITs, but you will see yourself. In other countries, you may have public REITs and private REITs. Here in Germany, all REITs have to be publicly traded companies by the Gesetz über deutsche Immobilienaktiengesellschaften mit börsennotierten Anteilen. That's German for REIT law. And that publicly traded status comes with additional rules when it comes to the minimum distribution of the REIT shares. No one is allowed to have 10% of the outstanding REIT shares, and at least 15% of the REIT shares must be distributed among a large number of investors, which no one holds more than 3% of the outstanding shares. Details that are more important for the REIT company than for you. You just need to know that a company can also lose its REIT status if it doesn't apply with the German REIT law. And we'll see what that would mean for you when we come to the benefits of REITs. German REIT law also demands that at least 75% of the earnings and of the assets of a REIT must come from real estate, directly from real estate, not from real estate related activities. The only real estate related activity allowed is for mortgage REITs to earn interest from mortgages. A REIT is also not allowed to trade properties. It should focus on passive real estate management only. As soon as the government thinks the REIT is buying and selling properties too often, the company might lose its REIT status again. Small changes are allowed though. A REIT can shift half its portfolio every 5 years or the entire portfolio every 10 years. What type of properties can REITs invest in? Generally speaking, they are free to invest in whatever they want. Commercial real estate, infrastructure, plots, residential real estate, but only residential real estate that have been built after 2007. The government prevents REITs from investing in older properties because they believe rents would go even higher than they are today. So you can see, REITs are quite regulated here in Germany. And it doesn't stop there. Why is real estate a great investment in the first place? Because you can leverage with a mortgage from a bank, which is not possible with any other investment. When the opportunity is there for the taking, many private real estate investors, like you guys, and property developers on our GermanReal.Estate marketplace leverage as much as they can, 100% if possible. Which makes a lot of sense, even with the current interest rates. REITs though can leverage only 45% and have to bring in 55% in the form of equity, which is mostly your investors' money. Just imagine the potential profitability increase of REITs if they could leverage 100%. Woo! There is one more rule that is also the reason why many of you guys seem to like REITs so much. You get a lot of passive income. In order to keep its REIT status, the underlying company has to pay out at least 90% of its taxable profits to shareholders. REITs were designed to give everyone the opportunity to invest in income-producing properties. And rental income that is shared with investors in the form of regular dividends is a great way to do that. When paying out 90% of its taxable profits, REITs are for the public good, at least for the investors' good, so they enjoy a 0% corporate tax rate. Yes, 0% taxes. Taxation happens only on a personal level. You guys have to pay the standard 25% capital gains tax rate on all profits that you make from REITs. As all REITs in Germany are publicly traded on a stock exchange, they are also as liquid as stocks or ETFs, which is a big benefit compared to the illiquidity of traditional real estate investing. Try to sell your property today. Good luck with that one. That liquidity from the stock market comes with a downside of the stock market as well. the high volatility, which I feel defeats kind of the purpose of a real estate investment. You actually want to invest in something secure without the ups and downs of the stock market. And the volatility of REITs is generally higher than the volatility of the overall stock market because REITs are basically sector ETFs for the real estate sector. The dividends come with a downside as well. When the underlying REIT company is paying out 90% of its profits to shareholder, there's not a lot of money left to reinvest and make the share price rise. So we generally see with REITs very little capital appreciation. And that was one major point of improvement I wanted to make with our real estate security tokens. We are so much more flexible than REITs and can decide how much profit we want to distribute with you guys and how much profit we want to reinvest to buy more properties. With the community portfolio token that we are working on behind the scenes, we can even let you guys decide with the percentage. So stay tuned for that one. And lastly, for the downsides, the reason why I think REITs are not as popular in Germany as they are in the US or other countries. They seem to have pretty bad strategies or pretty bad management. One of the two or both. This is the chart of the German REIT index. Since 2008, German REITs lost almost 20% in value. How is that even possible? Real estate prices in Germany are at an all-time high right now. So high, in fact, that everyone is talking about a bubble. And these REITs get to keep 10% of their after-tax earnings they can reinvest. Again, how is it even possible that they are down? Maybe one of you guys can explain that to me in the comments. Now that we know what REITs are, should you invest in them? It depends. REITs can be a great alternative to buying a rental property yourself. You basically get a diversified real estate portfolio with very little money and very little work. No down payment, no annoying tenants, no repairs, no commitment. But, and I think the chart that we've just seen makes this very clear, you need to do a lot of due diligence to find a good REIT that will make you money. I don't want to REITs here. I can understand it's tough for them to make money given all the regulations they have in the German REIT law. And that's why we founded GermanReal.Estate to give you guys a better experience and a better return when investing in real estate. Our website is linked in the description if you would like to check out which properties are currently available for you guys to invest.